In accounts, today we are going to start lesson number 11, Bank Reconciliation Statement. Okay, now see, you have to do the theoretical portion, that is from point number 1 to point number 7. Okay, and point number 8, 9 and 10 are omitted. Fine. Now in introduction, see, first of all, what do you mean by bank reconciliation statement? Okay, see, bank statement first of all is a passbook. Okay, and why bank reconciliation statement is prepared, that you are going to study in this particular chapter. See, first we'll see the introduction part. Double column or triple column cash book is prepared to record cash and bank transaction, that you have already learned. Okay, that is 2 columnar cash book and 3 columnar cash book. Okay, in the current scenario, bank services are very important for any trade or business. To pay and to receive the amount of payments and recovery through bank is also very popular. In modern age, quantum of transaction, that is number of transaction. Okay, if there is a large number of transaction, that is known as quantum of transaction, that is large number of transactions. Fine. With the bank have also increased manifold. For the transaction with or through bank, when any trader open a bank account, bank give a passbook. Okay, here see bank reconciliation. So normally we are cross checking our passbook, okay, with our cash book. So see, bank gives a passbook or a statement to him. In this passbook, different transactions that have been affected by a trader with a bank are recorded. A passbook is a copy. See, what do you mean a passbook? So this is the meaning of passbook. Okay, a passbook is a copy of a trader's account prepared by the bank in its book. The bank fill ups the details in the passbook to its customer. Okay, how customer will be knowing that what type of transactions they are doing, cash withdrawal or cash deposited. Okay, or at a time they can't remember each and everything, that on which date they have deposited or on which date they have withdrawn. Deposited means paise andar dalna, withdrawn means when you take money from the bank. Okay, so when you are giving and when you are taking the amount from the bank, that details you can come to know from the passbook. Okay, so what is passbook? A passbook is a copy of a trader's which is being given by bank. Okay, prepared by bank in its book. The bank fill ups the details in the passbook to its customer. Fine. See in the next paragraph. If a trader has maintained a bank account in his ledger or has maintained a bank column in cash book to record bank transaction, the balance of the bank account is worked on a regular time intervals. Okay, see, when you are preparing cash book, you are also having bank column in that. Okay, so you are having your details also, that when you are depositing and when you are withdrawing the money from the bank, you are recording this thing in your cash book in bank column. Fine. So here, that is regular timing, weekly, fortnight, monthly. So you are doing the total, that how much total amount is deposited and how much total amount is withdrawn. Generally, if a trader and the bank, both the parties have recorded all the transaction correctly and without any mistake, the balance of the bank account in the ledger of a trader and the balance as per the passbook should tally. Okay, see, when you are also preparing, okay, and bank is also preparing, so you are having your record in your cash book and bank is having their record in their passbook, so both should show the correct, okay, balance without any mistake. So the bank balance of the bank account in the ledger of a trader and the balance as per passbook should tally. But because of the errors committed or omission means you forget to do the entry, okay, or there are some mistakes. See, when these two balances are not correct, what will happen? See, cash book balance and passbook balance is incorrect. Why it is incorrect? So there may be some mistake or some entry has been forgotten, that is known as omission. Okay, in recording the transaction either by bank or by a trader, see, the mistake can be committed by bank or by the trader himself. So there can be mistake either in passbook or in, that is, cash book, or due to any other reason. If the difference arises between the balance as per bank account and the balance as per passbook, okay, bank account means that is cash book. Okay, in cash book you have bank column. Fine. So to find out the differences or to find out the reasons for such differences, after deduction of a reason, a statement prepared to reconcile the balance as per the bank account and as per the cash book is known as bank reconciliation statement. So when is this statement prepared? When there is a difference between the passbook balance and the cash book balance, okay, it does not tally, there is a difference. So a statement is prepared to just rectify that mistakes, okay, or whatever is forgotten, the entry is been done again and the balance is tallied, okay. So this statement is prepared that time. Fine. Then see, so in short, okay, what is bank reconciliation statement? So after finding out the mistakes or the reasons for the that is the amounts are not tallied, a reconciliation statement is prepared, okay, and that statement is known as a bank reconciliation statement. Bank reconciliation statement is not an account, but it is a statement. See, it is not an account, fine, it is only a statement. It is used in reconciling the balance as per the passbook and balance as per the bank account after finding out the causes and explaining such differences. Fine. Two things are very important to prepare a bank reconciliation statement. Bank account is the book of a trader, that is cash book, okay, and trader's account in the book of a bank, that is passbook. So here two important things you have to remember. One is cash book and one is passbook, okay. One the trader is having and one is with the bank. Bank account in trader's book is prepared either separately or bank column in cash book, as we have studied in the chapter of cash book, okay. We have studied 2 columnar and 3 columnar where we are having cash that is bank column, okay, in it, and the other book is with the bank, that is known as passbook. See, again they have given the definition of passbook. Passbook means, what is passbook? The passbook means a copy or extract of trader's account in the books of bank. Fine. So in passbook, the traders all bank details will be there. A passbook therefore is a book or a statement giving information regarding the transactions recorded by the bank in a trader's account in the ledger maintained by the bank when a trader opens an account with the bank, okay. So when the trader is opening the account with the bank, all the details are there in that, okay, related to the trader's account. A book given by the bank to record the details of that account is known as passbook. Nowadays, what is happening? Nowadays, instead of giving the passbook, the bank gives the statement at a fixed interval of time which substitutes the passbook. Nowadays, many of the traders are not taking entry in passbook, but they are taking the statements. Fine. When a trader deposit cash or check in bank or bank collect money on behalf of a trader at that time, to give credit of that amount to the trader, bank record it in the credit column of the passbook. Similarly, when a trader withdraw from the bank or draws a check or bank, when the bank pays the amount on behalf of a trader, recovers some expenses or commission from the trader, it is recorded by the bank in debit column of the passbook. In short, see how you have to record, okay, here they are giving the detail, that is in passbook, okay. So in passbook, okay, when something is deposited, the amount is credited. When you are withdrawing, okay, it is debited. It means when you give money to bank, they credit this amount in your account. When you take money from the bank, that is withdrawn money from the bank, okay, what they are doing, so they are debiting in your bank account. Fine. Then see, or some expenses are also, okay, withdrawing or expenses. So in short, you are taking the money, so amount is debited in passbook. You are giving the money to bank, okay, in your account to keep in your account, then that amount is credited. So for in withdrawn and expenses, debit in passbook. For deposited and for incomes, okay, for incomes the amount is credited in the passbook. Clear? Further, see, for a bank, trader account is a personal account. See, for a bank, trader account is what? It is one type of personal account, okay, party's account. Therefore, the rule of personal account applies to it. That is, as per the rule, debit the receiver and credit the giver. Bank debits or credit the trader's account in the passbook. When a trader withdraw cash from the bank, pays any expense or other, a trader become receiver and therefore that amount is debited to his account. When he deposit or bank collects any amount on behalf of the trader, he becomes the giver and therefore that amount is credited. So see, when he is giving the money to bank, it is credited. When he is taking the money from the bank, he is the receiver. So debit the receiver, okay, for any expenses to be paid. Fine. So this you have to remember. See, this is the specimen of passbook. date, particulars, check number. Amount withdrawn will be always debited. Amount deposited will be always credited. At the end you get the balance, that how much amount of balance is there in your bank, okay, and signature of the bank officer. Fine. So this is the details of this. Okay, next important point is cash book. Okay, what is cash book? See, cash book already you have studied in, okay. Traders record all the transactions with bank in bank column of cash book. When trader deposits check received from the customer with bank, and bank becomes the receiver and the bank balance increases. Okay. Same way, when bank collects income of interest or dividend on behalf of the trader, the bank balance increases. Okay, so when the amount is coming, it increases. Hence, bank account is debited by the trader when bank becomes receiver or bank balance increases. When a trader makes payment to the creditor or makes payment of any expenses by check, bank becomes the giver and the bank balance decreases. Hence, the bank amount is credited by the trader. Cash book prepared by a trader in the ledger is discussed. Okay, that is already discussed. Okay, see here, debit and credit. In short, what you will do? You will do the opposite of this. See, in cash book, deposited is credited. So, sorry, in passbook, deposit is credited. So, in cash book, deposit will be debit, and withdrawn or this will be, that is credit. Okay, opposite of this. You can also remember that in cash book, deposit is always with D. Okay, so in passbook, deposit is, that is C, credited. Withdrawn is here debited, and here withdrawn is credited. Okay, that way you can also remember. Fine. See, here in cash book you can remember, that is debit what comes in, credit what goes out. So here in cash book you have to remember the real account rule. Okay, and here in passbook you have to remember the personal account rule. Is this clear to everyone? Okay, that in cash book you will remember real account rule. Debit what comes in, okay, and credit what goes out. Cash is coming to you, okay, so you will debit, and cash is going from your side, so it will be credited. Same way your personal account rule, okay, that is for bank you will study, that is debit the receiver, okay, and credit the giver. Fine. Then see, bank balance and bank overdraft. Okay, this in a simple form I'll explain you. Okay, that is this. See, debit as per cash book will be treated as bank balance. Credit as per cash book will be treated as bank overdraft. Debit as per passbook will be treated as bank overdraft, and credit as per passbook will be treated as bank balance. See how we will remember this. Fine. Write down first debit credit, debit credit. Okay. Then 2 times cash book, passbook, passbook. Okay. Then first will be bank balance and last will be bank balance, whereas in between both of them will be bank overdraft. Again I am repeating, debit, credit, debit, credit. Cash book, passbook, passbook. See, first in alphabetical order C comes first. So here there will be cash book and then there will be passbook. First and last will be bank balance, and the in between two amount will be, that is overdraft. Okay. Then this also see I have written for you. Cash or check deposited. Okay. So in cash book, D for D. Okay. So deposit is debited. So in passbook it will be credited. Check sent for collection also same. Deposited and sent for collection you will do same thing, that is debit and credit. Check issued or drawn. So that will be opposite to this. Okay. Here there will be credit and here there will be debit. Fine. And dishonored. See, for dishonored you will remember the opposite of deposited. Okay. So here it is debit. So here it will be credit. Here it is credit. So here it will be debit. So see, this simple rules you have to remember. Fine. Further see, meaning of bank reconciliation statement. Okay, that is point number 5. See here there is a meaning of bank reconciliation statement. Okay, bank reconciliation statement means a statement showing the cause of difference in the balance of bank as per cash book and a balance as per passbook for a particular time or on a particular date. Okay, so first of all, it is a statement. This statement is showing what? So causes the difference between which two? So between cash book and passbook, that is for a particular time and for a particular date. Okay, so this is the meaning of BRS. See, bank reconciliation statement is in short known as BRS. Fine. Then, purpose of preparing bank reconciliation statement and its usefulness or importance. Why do we prepare it? So see, with the help of bank reconciliation statement, reason of the differences between the bank of cash book and passbook can be found out. So first, the reason can be found out. Okay. The causes of differences can be found out between both the balances. Error committed, if any, then it is rectified. If there is some mistake, that mistakes are corrected, that is rectified. If any transaction is omitted, that you have forgotten to give the entry, so that entry is being corrected. Okay. Then if any errors are committed in recording any transaction, they come to know immediately and the errors can be rectified. Same thing. By preparing bank reconciliation statement, actual bank balance can be known, which is shown in the balance sheet, and thereby real financial picture of the business can be obtained. Fine. Then embezzlement of cash, that is some up and down in cash, if it is there, it is not been tallying, okay, from bank transaction can be traced out by preparing the BRS. Compensating error. See, what do you mean by compensating error? Okay, the mistake is on both the side with the same amount by chance. Okay, that is coincidentally it occurs. That is, there is a mistake of 500 on debit side, same way there is a mistake of 500 on credit side. So these mistakes are compensated. Okay, and you cannot find out that there is any mistake. So sometimes such kind of errors are also being committed. You will learn about that also. By preparing reconciliation, even if both the balances are same, it does not mean that there is no reason of difference or error. See, sometimes the balance of cash book and passbook is same, but then too there is some mistake. Okay, so such kind of mistakes are known as compensating errors, that both the side the mistake is of same amount. So sometimes such kind of mistakes are not been coming out very easily. Okay. So in this case also reason of difference or error may be there, but they compensate against each other. Next is, by preparing bank reconciliation statement, information can be obtained regarding check deposited but dishonored, as well as interest, commission, charges, etc. So in short, you can get the details of each and every transaction with this. Okay. Then next, reason for the differences for bank balance between cash book and passbook. What are the reasons? See, okay, on the basis of these reasons only, that is, you will be preparing the sums, you will be doing the sums of this particular chapter. Okay, we will see the first difference. See, check deposited in bank but not credited by bank. See, check you have sent it in bank, but till now the bank people have not done the entry in their book. That is known as not credited by the bank. It means you have recorded in your cash book, but in passbook the entry is still now not done. Okay. Second, check issued but not presented for the payment. You have given the check, but still the bank peoples have not done the payment. Okay, how the transaction will be taking place and how the effect will come, that we will learn in the sums. Direct deposit by customer in a bank. Some of your customer has directly given the check in your bank account. Okay, they have not informed you. So as they have not informed you, in your bank the entry is there, but in your cash book the entry is not there. Then interest, commission, charges, etc. recorded by bank in traders account. See, sometimes interest the bank directly they are giving. Okay, whatever amount is there, okay, in our account, bank is paying the interest to us. So this they are paying directly. We will be coming to know that how much amount of interest bank has given. That is when we will go and we will take the entry in our passbook. Then we will do the entry in our book. Okay, that is cash book. So sometimes there is such kind of differences also take place. Fine. Then see. Next. Amount recovered on behalf of a trader and credited to his account by bank but not recorded in cash book. See, amount recovered on behalf of a trader. On behalf of a trader, the amount is recovered from the customer. Okay, but till now the amount is not credited in the cash book. It means the entry is done in passbook, but the entry is not done in cash book. Okay. Next is check recorded in cash book but left undeposited in bank. You have done the entry of check, giving the check to someone in your cash book, but still it is not been deposited in the bank, or somebody has given you the check and that check is still in your drawer, but you have not given that check in the bank. Okay, check deposited in the bank but not recorded in cash book. See, check is already deposited in the bank, but might be you have forgotten to record the things in the cash book. Then check issued and presented for payment in bank but left unrecorded in the cash book. You have given the check to someone, but by mistake you have forgotten. Okay, so that party reached the bank, the amount is deducted from the bank, but till now you have not done the entry in your cash book. Fine. Check recorded in cash book but not given to trader. See, you are supposed to give the check to the trader. You have recorded in your cash book, but till now it is in the drawer and you have not given the check to the party. So till now the check has not been reached in the bank. So there is difference in such way also. Then payment made by bank but not recorded in cash book. See, sometimes you are instructing bank to do the payment directly from your account, that is electricity bill or any other bill. Okay, so that is already done, insurance premium or something, but you have not recorded that amount till now in your cash book. Fine. Dishonor of a bill discounted with bank unrecorded in cash book. Sometimes the bills are dishonored, okay, and that is not recorded in cash passbook because that is done by bank, but you are not known to that and the entry is not done in cash book. Okay, so other reasons. See, what are the other reasons? Error committed in either totaling or carry forward. So see, there is no mistake in recording, but what is done, that is carry forward or totaling mistake is there. Amount of to be recorded in cash column is recorded by mistake in bank column. Either in cash book or passbook a transaction is recorded with wrong amount or on wrong side. So amount is also wrong and side is also wrong. So there may be such kind of other errors also. Now we will start practical sum, that is question number 4 on page number 290. See, what is there? Cash book of Sri Sudhir shows bank balance of rupees 5,000 as on 31st 12 2015. Prepare a bank reconciliation statement from the information given below. Okay, you have to prepare a BRS. So see, first of all, this is the format of the sum. Okay, that is BRS of Sri Sudhir as on 31st 12 2015, serial number, particulars, debit rupees and credit rupees. Now see how to start the sum. Okay, see, first of all, what they have given here, that is bank balance of cash book. See, cash book, bank balance 5,000. Okay, so see, first of all you have to see this 4 things. See what they have told you, cash book and it is bank balance. So see, cash book and bank balance. So which balance it is? It is your debit balance. Okay, so you have to remember this. Again, I'll revise this, how you will remember: debit, credit, debit, credit. Okay, in short, like this. See, you will write down debit, credit, okay, then again debit, then again credit. Write down like this. Then 2 times cash book, and then passbook and passbook. Write like this. Then bank balance, again bank balance. Okay, and in between it will be overdraft and overdraft. Like this you can remember in short. Clear? So bank balance according to cash book is a debit balance. So see, this 5,000 where you will put in on the debit side. Okay, so see, here on debit side we will write down 5,000. Okay, and here we will write down, that is bank balance as per cash book. Okay, this is our first step. Is this clear to all of you? Okay, how to write down this? You have to decide. Okay, here it will be given in the starting that this is the balance. Okay, so you have to see whether it is debit balance or credit balance. So from this 4 items we will see like this. Okay, this is the short form of this, how to remember. Clear? Now we will be moving on to the first transaction. A check of rupees 8,000 was deposited with bank on 29th 12 2015. See, our ending is 31st 12. But this check is not credited. See, they themselves have told that it is not credited in passbook. Okay, so here they have not credited. So whatever they have not done, we have to do. Okay, what do what they have not done. Okay, this is the rule. See, what is the rule? Do what is not done. Okay, this rule you have to remember, that you have to do whatever is not done. Okay, so here what they have not done, they have not credited. So what you will do, you will credit. Okay, so here go to credit side, write down 8,000. This is your first transaction. Okay, what we will write down? Check deposited. Okay, with the bank but not credited in passbook. Okay, this is the explanation you have to write down. Clear? Then second transaction we will see. C. What is there? A check of 6,000 was sent for collection to bank on 30/12/2015, which is not collected by bank till 31st/12/2015. See, not collected by bank means it is not recorded in passbook. Clear? So bank check sent for collection to bank. Okay, we have sent the check for collection to bank. Okay, so see what you will do, where it is not recorded. So see, here I have written you for check deposited and for check sent for collection. You have to remember both are same, and in cash book you will remember D for D. Okay, that is debit. Okay, here also check sent for collection is just similar to deposited. So here also this will be debited. Okay, see where the entry is not done in passbook. So for this, see in passbook what is there? Credit. Okay, so here what you have to do, you have to credit this amount. Okay, so 6,000 also will be credited. So see, here we will write down 6,000. Fine. Here we will write down, that is check sent for collection is not recorded in passbook. Fine, this will be the entry. Clear? Then see the third one. See, this is your third. A check of 3,000 was issued on 28/12/2015 for payment of electricity bill, which is not debited. See, directly no need to think also. They have told that what is not done, it is not debited. As it is not debited, so you have to do, see, till 31st/12, till the end of this month, they have not debited. So directly it is mentioned here that it is not debited. So we will debit it clearly. So here 3,000. Okay, we have to debit it. What we will write down here? So see what they have given here, that is check issued for payment of electricity bill. Okay, so here first we will write down check issued for electricity bill is not debited. That is, here they have mentioned it is not debited by bank in passbook. So it is not debited in passbook. Fine, this will be the transaction. Moving on to the next transaction, fourth transaction. See what is they have given. A check of 2,000 was drawn on 27/12/2015 and given to creditor. It is not presented for payment. See, it is not presented for payment means not recorded in passbook. Okay, not presented for payment means it is not recorded in passbook till now. Okay, so see check drawn. Okay, check drawn means check issued in that is in cash book. See here I have written check issued. Okay, see deposited, so in cash book it is debited, so issued it is credited. Just remember this two first. Okay, deposited word is there, so cash book is debit. Opposite to this it is drawn, so in cash book it is credit. Okay, like this you remember these two things first of all. Okay, so see drawn is credited in cash book. So here where it is not recorded, it is not recorded in passbook. Okay, so in cash book it is debited, so in passbook it will be what? It will be, that is debited. Okay, so here what you have to do, you have to debit, that is 2,000 rupees. Okay, so here we will debit 2,000. Fine. So here what you will remember, see check drawn. See, you can remember like this also. See, you are giving check, so from your account money will go. when from your account money is going, so in passbook it is debited. Okay, so here in passbook it will be debited. Clear? So see, check drawn, okay, that is to creditor, okay, which is not presented, for payment, thus not recorded in passbook. Fine, this will be the transaction. Clear? Next, that is fifth. See what is here fifth. Interest of 80 credited in passbook, which is not debited in cash book. See, directly there you are not supposed to think also whether debit or credit. It is credited in passbook and not debited in cash book. So it is not debited. So 80 rupees we will debit here. Okay, here we will write down that is interest credited in passbook but not debited in cash book, okay, or CB. Then say sixth, bank debited 100 in passbook for bank charges, which is not credited in cash book. See, here also directly they have mentioned to you, okay, that the amount is debited in passbook but it is not credited in cash book. So it is not credited, so you will credit it. Okay, so 100 rupees will be credited here. C. Okay, so now we will write here that it is bank debited in passbook for bank charges, okay, which is not credited, okay, in cash book. Clear? So here 100 rupees is there. See, now what you will do, leave 2-3 lines and here at the end do the total. Okay, see, now when you do the total, see this side it is 5,000 plus 3,000, that is 8,000, 8 and plus 2, 10, 10,080 rupees. See here 8 plus 16, that is 14,000, and 14,000 plus 100, that is 14,100. So see, we can see here that the credit side is having the greater amount. Okay, so here you will do, that is, here we will write down 14,100 and 14,100. Okay, so the greater total you will write on both the side. Now from this 14,100, what you have to do, you have to deduct this 10,800. Okay, now see, as we have seen that this side is total is higher. Okay, so the higher amount total you will put here, and now from this you will deduct the amount of debit side. So it was 10,080. So see, 14,100 minus 10,080. Okay, so what you are getting that is 4,020. Okay, see the difference you are getting on this side. So this side you will write down 4,020. Fine. What is this? So see, here when you started the sum, it was bank balance as per cash book. Okay, so now it will be what? Here it is as per cash book. So here you will write down that is as per passbook. Okay, and see, it is debit balance. So see, when you see here debit balance, okay, so debit balance of passbook is what it is, that is bank overdraft. Okay, so here what you will write down, here you will write down bank overdraft. Okay, at the end. So please remember that if the sum is started by cash book, here it will be passbook. Okay, and then you have to see whether debit balance or credit balance. So here debit balance, and when we go and see here that is debit balance of passbook, it is bank overdraft. So here you will be writing bank overdraft. Okay, so this is the solution for question number 4. Clear?